All right, I have a great guest with me today. His name is Michael Saylor, and we're going to be talking about the US economy, inflation, what's going on in the United States and globally. But the main focus of this interview and discussion will be Bitcoin and cryptocurrencies. Michael, thank you so much for being on my show today.
Yeah, thanks for having me, Steven.
So, just for those that don't know you, Michael Saylor is one of the founders of MicroStrategies and the former CEO. And I believe you now are the executive chairman of the board. Is that right?
That's correct.
Okay. And when it comes to Bitcoin and crypto and regulation, I personally believe you're one of the most in the loop people, and that's why I wanted to have you on my show because I think Bitcoin is something that everybody needs to research. And money has changed a lot in my 40 years of being alive. Obviously, you're older than me. What are reasons why you believe people should research Bitcoin, possibly have some of it in their portfolio? And then if you could, for those that are new to Bitcoin, maybe give just a 10,000 foot view level idea of what Bitcoin is and why you believe it's going to change the world.
Yeah, I mean, it's really the question of the age. I think you have to start with some ideas. I mean, many words are thrown around without us being very precise about it. So, for example, inflation is a word that refers to an increase in prices, but oftentimes that's then converted into consumer inflation, which is an increase in the price of a market basket of consumer goods defined by the government. But if you think broadly about what is inflation, inflation is simply the price appreciation of anything, and the economy consists of hundreds of thousands of things, and so there are hundreds of thousands of different inflation rates. And if you track the rate at which prices increase of consumer goods, you're going to generally get a low inflation rate. And if you have the flexibility to pick what goods you put in the consumer basket, you can pick consumer goods that have very little energy content or material content in them, that are easy to manufacture with capital or machinery or computers, and they will have a very, very low inflation rate. Um, because over 100 years, human beings get better at manufacturing things like streaming Netflix videos. If you think about the cost to manufacture Beethoven's Fifth Symphony 200 years ago or 100 years ago, it was an orchestra. It's very expensive. And the cost to listen to Beethoven's Fifth Symphony today would be not even a penny. So we're good at creating certain products or services. But on the other hand, other things you can't easily manufacture with capital or with a machine. An example of that would be an acre of beachfront property in Palm Beach. So if you track the inflation rate over 100 years, you might conclude it's 2% if you tracked the consumer basket of goods defined by a political organization. But if you actually were keeping track of the cost of gold over 100 years, you would find that that gold went up in price, not by a factor of 20, but by a factor of 100. So the inflation rate of consumer goods looks like 2%, but the inflation rate of gold looks like much higher, 4 or 5%. And if you actually looked at the rate at which an acre of land in Palm Beach goes up over 100 years, it goes up by a factor of nearly 1,000. So the inflation rate starts to look like 7 to 8% a year. So I think the first thing you have to consider is inflation is a vector. And if you focus upon consumer inflation, you're just looking at the price of highly manufactured products that generally have a quality that's deteriorating continually. And so consumer inflation is the amount of money you need to stay poor and live a lower middle class lifestyle. On the other hand, monetary inflation or asset inflation is the rate at which you have to accrete your wealth in order to stay wealthy, or to be, and if you want to become wealthy, you have to beat that number. So the monetary inflation rate in the US has been about 7 to 8% a year for 100 years. The consumer inflation rate's only been about 2% for 100 years. And so the reason that this is an interesting issue is right now those monetary inflation rates have exploded. The monetary inflation rate outside the US, especially in weaker countries, is often double. So it's 14% a year. And since COVID, monetary inflation rates leaped because as countries run large deficits, they actually print money that they can't pay back. And so the inflation rate of many scarce desirable assets went up much faster than 2%. In fact, the money supply expanded by 40% or more over a couple of years. So let's think about what is money, right? Well, everybody uses money to mean something different. Some people think of it as currency. Well, the dollar or the euro is a currency, a paper currency, use it as a medium of exchange. Money, you could think of it as your economic energy or your wealth. So if we talk about, how do I keep my money? You could also think of it as capital. How do I keep my capital? Capital is like economic energy. So if you want to retain capital or you want to keep the value of your money, you're going to have to convert it from a currency into an asset. And then the question is, what asset? If you had all the money in the world and you bought up all the dollars 100 years ago, then the money supply, the currency supply of dollars doubles every 10 years. 7% a year means that every 10 years you cut the value of your holdings in half, by the law of exponential math. So think about what happens if I double the currency supply every 10 years for 100 years, right? 2 to the 10th, 1,000, whatever, 24, 48, whatever the number is. And so 1,000x. So what that means is if you had all the money in the world and you convert it to currency, you would have 0.1% of the money in the world in 100 years. 99.9% of all the money in the world would have been stripped from you and given to a friend of a politician. So the politicians get 99% of the money over 100 years. If you store your capital or your wealth in a currency inflating at 7% a year. If you store your wealth in a currency inflating at 14% a year, well, now you get cut in half every 5 years. Wow. So now it's much, much worse, right? And if you want to see an example of that, you look at the Argentine peso, where the peso was like 1 peso to the dollar 23 years ago. And right now it's 730 pesos to the dollar.
Oh my God.
Right. So you're looking at losing 99.7% of all of your wealth in 22 years or 23 years, right? Not even 100 years. So currencies are a pretty awful way to store your wealth. We can see that. It's not that much better if you store it in bonds, though, because if the bonds yield 3 or 4% interest, after tax, what that means is instead of a 7% inflation rate, it's a 3.5% inflation rate, which means that you lose 95% of your wealth over 100 years. Instead of 99.9, just 95 or 96% or something. So that doesn't work either. So then you got to say, well, what do I do? If you invest all of your money in the S&P index, then you might get a 7 to 8% gain a year over 100 years. It offsets the 7 to 8% monetary inflation. So you pretty much keep what you had over 100 years. If you actually look at the rate of scarce desirable real estate, like Miami Beach real estate, a home in Miami, or even better, acreage in Miami, you could have bought an acre in Miami between 10,000 and 20,000 an acre 100 years ago, and now you're looking at 10 million an acre. So you can see where that all takes you.
Yeah.
Land is a decent yardstick, right? Because no amount of factory will produce more beachfront property in Miami.
Yeah.
No amount of capital So the problem with storing your economic wealth in gold is the gold supply increases 2% a year, which means every 35 years you get cut in half, which means you get cut in half 3 times over 100 years. So whatever you started with 100 years ago, you have 12.5% of that. You lose 88% of your value over 100 years. So, I mean, it's better than currency, and it's better than bonds, but it's not great. So the question for any worker or even a corporation is how do you accumulate wealth, or at least retain the wealth or the capital that you have over the course of a long period of time in an inflationary environment? And if we look at people in places like Africa, Nigeria, Argentina, Venezuela, Lebanon, Turkey, well, they have a weak currency and they have an unstable banking system. So whatever you have, you're likely to lose most of it, 95 to 99% of it within 20 years, just due to the currency debasement. But if you convert it to dollars and put it in a bank in one of those countries, the problem is the bank is likely to freeze your funds, convert it back into local currency, and devalue it. So if you can't trust the local banking system and you can't trust the local currency, and if you're stuck in the country, then the issue is, how do you protect your capital, or how do you protect your wealth? And of course, that conclusion is you kind of have to convert your wealth into a liquid asset, and then you have to get it out of the country. But how do you do that, right? You can't just carry a bunch of money through an airport in the form of gold bars.
Yeah.
And so normally only
didn't you lose $1 million in Argentina trying to
yeah.
get the money out?
Well, I generally I had the experience of, I had the $1 million in dollars in a bank in Argentina. But when the Argentines devalued the currency, first they froze everybody's assets. They locked it in the country, and then they converted it into pesos, and they devalued the peso 10 to 1.
So everything you're sharing is because you learned through the school of hard knocks.
Yeah, I learned the hard way, right?
Yeah.
I mean, if you have capital in one of these countries, generally the risk is the bank will just steal it, or the currency will collapse, or some combination of some legal financial policies whereby the government freezes it, the bank converts it, then the currency is devalued, then it's frozen a bit more, then there's a capital control, and you end up just losing all your money. So Bitcoin represents it represents a new technology. I mean, a breakthrough technology, and there's a couple of benefits to it. The first benefit is it's the first digital monetary network in the history of the world. So it's capped at 21 million Bitcoin. So that means if you owned all the money in the world, you bought all the Bitcoin, you had 21 million Bitcoin. 100 years from now, you still have 21 million Bitcoin, right? I mean, there's no more Bitcoin coming.
Yeah.
Now, I mean, that's kind of hyperbolic, because obviously no one's going to have all the money in the world. But I mean, a better example is if you buy 1% of the Bitcoin, in 100 years, you'll still have 1% of the Bitcoin.
Yeah.
If you buy 1% of the gold in 100 years, you'll have 1/10 of that. You'll have, 0.12% of the gold. And if you buy 1% of the dollars in the world, you'll have, 0.1% of what you had 100 years from now. So Bitcoin is a conservative monetary network. In fact, there's no heat lapse, there's no leakage, there's no inflation. So if you're looking for something that you can hold for a long period of time, it's kind of like a freezer for your money, right? If money was food and it was spoiling over the course of days, you want a refrigerator, you put the food in the refrigerator, it doesn't spoil, right? Right. So Bitcoin is like that. It's a way to freeze your economic energy so that it doesn't dissipate. And that's the first big idea. But the second idea is Bitcoin's a bank in cyberspace. So it's kind of a bank a money transfer network, and it's the money. So it's all three of those things. So this is not as important to Americans that have a bank they trust. But if you live in Africa and the bank is run by the cousin of the guy that just took over the country last week, then if you put your money in that bank, they're probably just going to take it. And if you want to convert your money from that local currency to another currency, they probably take half. Oftentimes the capital controls are such that the country will fix the exchange rate at half of the real value. So every time you change money, you give half of it to the bank and you get the other half.
Wow.
And it's not a terribly fair thing for the proletariat. But what Bitcoin allows you to do is, if I wanted to buy your car and you were in Africa, I could pay you for your car in Bitcoin, and then you would get the fair exchange rate for the Bitcoin. Then you could hold the Bitcoin either on your own hardware device, you could be your own bank, or you could deposit the Bitcoin with a custodian somewhere outside of your country. Because Bitcoin is a global network. So everybody in the world, anybody can be a custodian of Bitcoin. So there's competition. So you would have an asset which is pure property, which is not being debased by capital. It's not being debased by manufacturing or devalued by manufacturing, and it's not being devalued by monetary inflation. Right. And you would not have to rely upon the local banking system, the local government, or the local currency. All three of those are weak links. And if you look at wealthy people, most people that are wealthy in the world are wealthy because they converted their currency, whatever they earned, they converted it into property. Like they bought, what does the royal family of the UK have? They own the middle of London. What does the Emperor of Japan have? They own the middle of Tokyo, right? If you own a block in New York City or Paris, then when would you ever want to sell that? You probably never want to sell it. You want to keep it forever. Yeah. And if you want to stay wealthy, you buy that land and you hold it because it appreciates in value at the rate that the money collapses. But if you want to get wealthy, then you go leveraged long. So like if I can borrow a bunch of money, if I can borrow $10 million and buy $10 million worth of scarce desirable property, then every year it goes up in value 7%. And after 10 years, it's doubled in value. So now my $10 million acquisition is worth 20 million and I've got 10 million in equity. So then I refinance the property and I take out 5 million in equity and I live off of that without paying tax on it. And the next 10 years, the $20 million property is worth 40 million. And then after 10 more years, the 40 million is worth 80 million. So you see how your family starts to become very wealthy because your grandfather bought 10 blocks in the middle of New York or in the middle of Paris or some city. Of course, it has to be scarce desirable, right? People have to want to live there.
Yeah.
And so the risk is if you bought those 10 blocks in the middle of, Kansas, maybe it doesn't appreciate at the same rate. Generally, this strategy works well when you're buying land in the middle of Tokyo, London, Paris, or New York, right? We all know stories of wealthy people that bought that land. But you could think about Bitcoin as cyber Manhattan. Imagine I created a city in cyberspace that had only 21 million blocks, and one day 8 billion people will want to live there. And they're never going to make more than 21 million blocks. And all 8 billion people can move in, and there's no mayor to put a zoning restriction on it or pass a city tax. And there's no governor to put a state tax on it. And there's no president or Congress to put a national property tax on it. And when the place where you live decides to tax it, you can fly on an airplane, to Singapore or Monaco or some other place that will give you, or you can move from one state. Maybe you move from a high tax state to a low tax state, and then you keep your property. So Bitcoin represents digital property, and it represents a property right to 8 billion people. that is being driven by the adoption of the billions of people. I mean, everybody in the world wants property rights. I mean, it's been the driving theme of human history for thousands and thousands of years. That's why people came to America. That's why they went west. That's why they went anywhere. So that's a very deep-seated theme in humanity. But the second thing is everybody wants money, and you either want it if you don't have it, or you want to keep it.
You do.
Right. And there's a whole set of dynamics of people that are actually passing laws to basically deprive you of your money. If you own assets that generate rents, that's a currency derivative. The rents are going to be devalued. If you own bonds, that's a currency derivative. They're going to be devalued. And every single fiat currency in the world is built to be devalued. The only question is, will it be devalued at 7% a year versus desirable assets? Or will it be devalued at 14% a year? Or will it be devalued at 40% a year? But it is 100% certain that the currencies will be devalued. The bonds are going to have a negative real yield. They'll be devalued. Value stocks and commercial real estate that's valued partially on the cash flows will be devalued. So Bitcoin kind of represents more like that trophy asset, like the one of a kind trophy piece of art, or the one in a kind franchise, or the one in a kind beachfront property. Everybody wants. It's not valued based on cash flows. It's valued based upon its scarcity and desirability. Now, we have lots of examples of people that buy Ferraris as a store of value, or Rolex as a store of value, or commercial art, or art as a store of value. But the ideal money is something liquid and fungible. And Bitcoin is liquid and fungible. So it's like that high quality, desirable real estate, but it's like buying a pure city block in the most desirable city on earth. And it's got a global brand, because it's not, Tokyo's only interesting if you speak Japanese, and Paris is maybe interesting if you speak French. But, Bitcoin is neutral in cyberspace. The Chinese like it, the Russians like it, the Americans like it, the Europeans like it, the Africans like it, the South Americans like it. Why wouldn't you like it, right? It passes this last Bernard Arnault test, which is, you ought to buy something that someone richer than you and more sophisticated than you will want to buy from you in a decade. And if that's what you're buying, then you're probably going to be okay.
Yeah. Oh boy, that's all very interesting. The first time I really thought about it was when I heard you tell your story of trying to get money out of Argentina. The other time that I thought about it was as I've covered the Russia-Ukraine war. When it first broke out, I said to my wife, okay, if we were in this situation and we're running from Ukraine with Ukrainian money to Romania or Poland, they're not going to want that money because they don't know what's going to happen to this country. Or if all of my money is in gold, what am I going to do? Get a wheelbarrow full of gold, or put it in my backpack and someone's going to mug me and kill me? And then can I exchange it once I get to Poland? And I remember thinking, oh my gosh, like they could go from this area to any part of Europe with Bitcoin, and it would be able to liquidate that and keep your family moving forward. That was the first time that my brain was like, wait a minute, there's something to this digital energy being able to move around the globe.
Yeah, Bitcoin is economic sovereignty, financial freedom. It might be life, right? If you were Jewish and you lived in the 1930s in Germany, it's a difference between life and death. You can't take your buildings with you. You can't take your land with you. They won't let you smuggle the gold through the airport. You can't take cash with you. Diamonds were the closest idea, but diamonds aren't scarce. You can produce a lot of diamonds. In the absence of a cartel, the diamond value collapses. So humanity for thousands of years has looked for a way to store their economic energy or their wealth, and to own it, and not have someone seize it from them, whether it's a criminal or whether it's a hostile regime, or whether it's the majority abusing the minority. if you study the history of the world, there's 1,000 stories, and thousand is an understatement, thousands and thousands of stories where someone takes over a country and then somebody else is in the minority, so they just pass a law taking all their property. Like, whether it's, happened to the Jews 1,000 times, it happened to the Christians under the Muslims, happens to the Muslims under the Christians, happens, to the Puritans under the Anglicans, happens to the Protestants under the Catholics, happens to the, to the Quakers, underneath the Puritans. It's amazing the creativity with which human beings have a way of deciding that someone else is other, and just taking their stuff. And eventually, if you're lucky enough to be able to flee with your life, then you've got your life. But if you can flee with your property, then you can start again.
Yeah. Yeah.
And so Bitcoin's the first time we solved that problem. We never really created perfected money. It's basically pharmaceutical grade gold engineered, or synthetic money that has infinite economic density. Not only can you carry all that you have, right, either in your head or on a hardware wallet, but you could also zap all that you have to your wife in another country or to your children if you needed to. And so it does represent, a new degree of freedom and sovereignty for the human race. And of course, that's desirable to everybody on the planet. In fact, it's not just desirable to all 8 billion people on the planet. Every company wants that. I mean, it's, companies get abused by countries just like people get abused, right? So at the end of the day, it solves a problem every human faces. It solves a problem every company faces. It also holds out some new ideas, like most of the modern financial system is all about monetizing assets, where people are forced to invest in stocks they don't want to invest in because the alternative is to have their money taken from them by inflation. So why does an 80-year-old retiree have to juggle stocks in order to avoid losing their life savings? Right. And so hence you have the creation of ETFs, and you have the creation of the S&P index, and you have the overvaluation of stocks. If a company ought to be worth 10 times cash flow, it's worth 20 times cash flow because there's a monetary premium assigned to it. You see a monetization of real estate in places like Canada or even the US, where the house costs twice as much as it ought to cost, because it's valued as an asset to store your wealth rather than as a property to live in. So in the absence of a decent financial asset to store your wealth, people will use Ferraris and Rolexes and Airbnb second apartments, and they'll buy random things they don't need, or they'll buy companies they don't need. And you'll end up with like the meme stock craze and all sorts of financial speculations. But ultimately, these are people that are faced with the choice of, I'm either going to lose everything because of inflation, or I'm going to buy something that I don't need now, but I'll speculate that in the future someone else will buy it from me.
Yeah.
And hyperinflation, when the currency collapses, you'll buy crates of soap. You'll buy crates of toilet paper, right? You'll buy bins of charcoal, or you'll buy anything, lumber, because it's better to have the lumber than to have a bunch of paper worth nothing in 2 years. Yeah. And so that of course results in a distortion of the financial markets, and it also results in a seizure of the actual manufacturing markets, right? Goods and services get out of kilter, and you end up with shortages and scarcity, and the economy just doesn't work, and eventually you're kind of ripped back to some kind of barter. Yeah. Right, where the economic engine is just cut in half. And we see that in different places today. And of course, once the currency collapses, right, that's kind of the end of the society, right? That happened in Rome. When the currency collapses, then everybody kind of moves back on their own farm and they produce everything they eat. which is kind of a nice idea, except for the fact that if everybody has to produce everything they own, eat, the carrying capacity of the society is cut by a factor of 20,
Yeah.
right? You need specialization. And so that's the challenge we face. And Bitcoin is the first digital monetary network. And it offers people the ability to do something rational. And I guess I'll make one more point, which is most corporations, they basically don't accumulate capital. They give all their capital back to their shareholders, or they go into debt as fast as they can. And the reason that you would go into debt as a company is because positive working capital is dilutive to your shareholders. You want negative working capital. So if you're a rational corporation, you're better off to borrow $1 billion and pay interest on it than you are to keep $1 billion in cash flow and get paid the interest on it. And that's because the interest you get paid on your cash is less than the monetary inflation rate.
Yeah.
So what you see is this LBO craze, and you see most corporations in the world, they dividend out all of their earnings, they buy back their stock, and then they take on debt or they do acquisitions. All of these things are long-term making the company weaker, but they're doing it because over the near term, those look accretive to the shareholders, and they're accretive because the sovereign debt is yielding less than the monetary inflation rate after tax. And Bitcoin represents a cure to that. It's now possible for a company just to accumulate Bitcoin on its balance sheet. So if you generate billions in cash flow, instead of giving it away to your shareholders and paying a dividend tax on it, you just buy Bitcoin with it, and the Bitcoin is appreciating at double or triple the rate of the monetary inflation. So Bitcoin is accretive. You can actually just keep your capital and generate shareholder returns on the Bitcoin, and you will get a progressively more powerful endowment. You'll be better endowed each year. So corporations, instead of having a short life expectancy and crashing because they're running on negative working capital, will actually get stronger, which would be good for jobs, right? They wouldn't, every time a company goes bankrupt, it doesn't help the workforce, right? Right? You want the companies to not go bankrupt. So it'd be better for jobs, better for consumer options. It would create better products, better services. It would be more stable for the community, right? And that's what Bitcoin offers.
Yeah. Did you see that MGM Resorts in Las Vegas is dealing with hackers right now? They're losing over $8 million a day. I'm just wondering how a Bitcoin could have protected them from being hacked and losing all this money, where if they had a global network that had to check in with all these different nodes to verify something, versus these guys crack into their system and now they're just making them leak money all over the place. Could Bitcoin be used down the road for protecting a corporation or an individual?
Yeah, I could. Bitcoin is the most secure computer network in the world. And it's secured based on computer power. They're about 420 exahash. That's basically the hash rate that every computer on Earth would generate, maybe that, probably a bit less than that if they all started hashing. So it's all the computer power on the Earth, right? Huge amounts of computer power, because the Bitcoin mining rigs are generating hashes 2,000 times more efficiently than a normal CPU. And there are these massive Bitcoin centers everywhere in the world. So you have raw computer power that's backed by raw electrical power, about 12.5 gigawatts. That's all the power of the US Navy, a bit more than the power of the US Navy and the propulsion system. So you have a massive amount of electrical power driving a massive amount of computer power. And those two things together create this network that's unhackable, because there's no finesse. You need brute force, but the brute force you need is you would have to hijack every single computer in the world and all the electricity in the world. And even then you couldn't really hack it. You would just slow it down a bit. So if what you want is a database that's immutable and you want a network that's unstoppable, then Bitcoin transactions represent the immutable database. They're stored all around the world on these Bitcoin nodes, protected by cryptography. And then the Bitcoin network is the unstoppable network. Now, you want to stop hackers, you anchor your other cyber systems into Bitcoin using a Bitcoin identity, and call it orange check if you want. If I actually take my private keys that I use to sign a Bitcoin transaction, and then I use them to start to digitally sign other transactions, like a posting on Twitter or a posting on a website or a transaction that I certify, then I've anchored my security into the Bitcoin base layer. And you can either anchor your identity into the Bitcoin base layer. It's like having a cyber passport that no government can tamper with. Or you can even timestamp the transactions themselves onto the Bitcoin network. So that's like kind of having the ultimate notary network. If I wanted to issue a document that dispatched $1 billion of capital, I could hash it. I could burn it on the Bitcoin base layer and sign it with my Bitcoin private key, and the hash would last for 1,000 years. And the signature is based on an identity that nobody can tamper with. And if the entire nation state of China wanted to tamper with it, they couldn't. Right? So no nation state could screw it up. No corporation could screw it up. So I really think, what we see right now is the world runs on very fragile cyber systems. When the database that has your identity in it is run by a single corporation, then you can be canceled with a subpoena, right? I mean, a simple note from the district attorney of one of 10,000 jurisdictions may very well cancel your account. And so that's the problem with centrally managed databases. And nations, of course, can cancel your account. And what happens, like you post something on YouTube and maybe it's not popular and they just take the video off YouTube, it's gone forever, right? You need to find a way to post it somewhere where it can't be mutated or it can't be censored. And Bitcoin was created to solve this problem. I mean, the first use case was money, right? If I'm going to send you $100 million and you're going to, hold it for 100 years, you would definitely want that transaction to be immutable and unstoppable.
Yeah.
But if I send you a note saying, okay, you now are inheriting my entire estate, that's $100 million worth of land, is that any different? I mean, it's the same idea, the last will. And if I send you a contract saying I hereby sign over $100 million worth of buildings to you in return for this much consideration, they're all the same thing. The hackers, they take advantage of the fact that the databases are brittle, and they take advantage of the fact that it's very difficult to verify and authenticate identity in cyberspace. Like, where's the universal, identification database, right? There's not one. And if there is one, you're going to trust Microsoft or you're going to trust Google. Well, the Chinese don't trust Google. The Russians don't trust Microsoft, right? So, I mean, when you get these cracks, right? No company, Facebook's not going to trust Google. Google's not going to trust Apple. Apple's not going to trust Facebook. Alibaba's not going to trust any of them.
Yeah.
Right. And if they wanted to trust each other, then some politician would shut that down in a heartbeat, right? Like the Chinese government doesn't want Alibaba to trust Google, do they?
Yeah.
Or the US government doesn't want Google to trust Alibaba, do they? So individuals can't solve the problem, corporations can't solve the problem, and nation states can't solve the problem. But what we've got in Bitcoin is a network that has organically grown and spread throughout the entire world that represents a neutral, global, immutable, unstoppable, immortal database and non-censorable, unstoppable network. And there's a lot of uses for it. The first one is to store money. A lot of times people talk about sending money, right? The big breakthrough was Satoshi figured out how to send money between two people from me to you without a trusted intermediary. But that's not the brilliant idea. I mean, that's a cool idea. But the deeper idea is, if I can send $1 million from me to you without an intermediary, I can manifest $1 million in cyberspace forever without an intermediary, right? I can put something in orbit,
Yeah.
right? It's like it's basically putting the money in cyberspace. If I can put $1 million in cyberspace, I can put 1 billion or 1 trillion or 100 trillion in cyberspace. Once I have the ability to put the capital into cyberspace, then then the capital ends up securing the network, right? Because in addition to the computer power and the electrical power, you also have political power and you have economic power, right? You have 220 million people that have put $550 billion of capital into the network. The more capital they put in the network, the more they invest in the computing power, the binding network, right? And the more nodes, and then the more political power the nodes get. And so this entire thing, it's an asset, and it's also a protocol, but it's also an ideology and a technology. And if you think about it as technology, ideology, protocol, now it's spreading like other protocols, like the English language, right? Like base 10 mathematics. There are certain protocols that get very, very powerful. And once they spread throughout the entire human race, it's pretty hard to rip them out of the human race. Just like it's hard to get rid of the knowledge of fire or electricity, right? It's just hard to remove it. Once it's here, it's here. So Bitcoin is that, and it's having a dramatic impact on economics, right? It's engineering crashing into economics for the first time in human history. And now you've got thermodynamics and engineering science and physics and mathematics, and there's a right and a wrong answer, and it means something. So it's having a profound impact on economics, but it's also crashing into politics, right? Because as a nation, I can be a nation, some banana republic in Africa, and I can pass a law saying everyone must keep their money in my bank, and then the exchange rate is half of the free market exchange rate. But that just might not work anymore, because if I've got a mobile phone, I could just bypass that.
Yeah.
Right. So now politicians have to take this into account. 40 years ago, they didn't have to take it into account. So you could control the flow of money 40 years ago. You can't control it now. And so it has an economic impact, a political impact. It's also economics crashing into technology. Put it the other way, Apple Computer may become a bank with $1 trillion of assets, right? You didn't think that you were a software company, but you were a bank, but now maybe you need to be. And so what you've got is this radical new idea that's leaped out of Pandora's box, and it's causing people to rethink technology and rethink politics and rethink economics. And of course, it's an ethical imperative. You rethink ethics, right? Because now you can actually give sovereignty, empowerment, and property rights to billions of people. And so maybe you might even rethink charity, because it used to be if you wanted to give your money to charity, then you have to give it to an organization that's centrally managed. But now, if you want to give money to charity, all you need to do is just buy a bunch of Bitcoin and then just forget the keys, like burn it, and you will have made a ethical pro rata distribution of economic wealth to everybody else on the network instantly forever.
Yeah.
So like, how do I give all my money to the people? Right now I can literally, if I have a hardware wallet and I had $1 million and I lose it, I've just given $1 million to the people.
Yeah.
So this is a paradigm shift in the way you think about things. And it's affecting, just like it's affecting corporate finance. I just mentioned, it used to be that, a CFO wants to get rid of their capital as fast as possible and go into debt. Well, what if I just inverted that, turned it on its head and said, now you get to keep all your money? So it's changing the way you think about corporate finance as well. And so I just invite anybody to spend time thinking hard about how this affects your nation, your city, your state, your company, your family, your product, your service, because it is profoundly disruptive and empowering.
Yeah, yeah, absolutely. When you said, the orange check or the ability to check in on something, man, I would love that. Unfortunately, I'm not like huge on YouTube, but I'm big enough that people are now scamming people using my name and my face, and it would be nice to be able to, hey, this is, the real Stephen Gardner, and it's going to come from a network that's absolutely secure. That that would be really nice. I know we're coming up on time here. Maybe we just one more question. What is your thoughts on the other cryptos that are out there? Last I checked, there was over 17,000 of them. I used to get really excited about them until you brought up the fact of, if they get regulated, just how expensive it is to be a publicly traded company like MicroStrategy or Apple. What are your thoughts on the other ones, or do you not even think about the others because you're just so laser focused on Bitcoin?
Well, Bitcoin isn't the first crypto idea. I mean, people tried 50 times before to launch a crypto network, and they all failed for one reason: they were too centralized. There was an attack surface. Generally, the problem is if there's a corporation or there's a founder and they keep control, if you keep a beneficial interest in the network, you've really created a security, and probably an unregistered security. You're creating an equity. So the only way for this thing to come to life as a protocol is you have to disclaim beneficial interest, and you have to give up control of the network, right? If you look at the religions of the world, whether it's Judaism or Christianity or Islam, the founders are all dead. They're gone, right? You have to pay, and they gave it as a gift, right? So there are a lot of protocols in the world that are successful. For example, base 10 math, the English language, the French language. These are successful protocols. Fire, electricity. There are technologies and techniques that are successful. But if Prometheus was still here and wanted to cut, every time you started fire, or Prometheus was tinkering with the fire, somehow it wouldn't quite have the same energy to it. So what Bitcoin has going for it is Satoshi launched it with the Immaculate Conception and then went away. And those Satoshi coins never moved. And so you don't have a company that controls it. And you don't have a beneficiary. And it was given as a gift to the world. If you want to create an open source protocol, I'll give you another example of a successful one. Linux. It's because Linus Torvalds isn't charging you a fee, and it isn't controlling Linux. There are plenty of open source protocols that are successful, but ultimately they have to be given to the community. You have to let go of them. And when you let go of them, maybe they have a chance of living. If we look at all the cryptos right now, Bitcoin is the only crypto network universally acknowledged as a commodity. And that means an asset without an issuer. A commodity is ethically superior and legally superior to a security. A security has an issuer and has a beneficiary, and therefore there is someone that has an ethical obligation to be fair and truthful in their disclosures to the counterparties, right? If I can control the amount of my stock, then I have to be truthful to you about whether I will or will not print 100 million more units of it next week.
Yeah.
It's just common sense. So the real issue is, out of the tens of thousands of other cryptos, how many of them are assets without an issuer? Well, there might be half a dozen. We can debate, like, is Litecoin an asset without an issuer, or who controls these things? But it's a debate. With Bitcoin, it's universally agreed. It's been endorsed by 2 heads of the SEC, by the head of the CFTC, by senators, by Congress people, by governors, by mayors. by academics, even by everybody in the crypto community, right? There is no debate that Bitcoin is sufficiently decentralized to be an asset without an issuer. And for it to be an institutional grade asset, for an institution to buy it, it can't be a security. It needs to be a commodity. An institution can buy a registered security. That's like you take Apple public and you issue 10,000 pages of SEC disclosures. They can buy one of those, but if we consider that, Apple stock doesn't make money for the world. Like that is, Chinese can't save their life savings for 100 years in Apple stock, right? You can see why that wouldn't work.
Yeah.
Right. Or the Russian government or nobody in Africa or South America is going to build their treasury on the stock of a American company. So what you need is a commodity. And there's the debate about a few, but they're all 1/100th as big as Bitcoin.
Yeah.
Then there's a lot of other good ideas and interesting ideas, a lot of fun ideas. Stable coins are interesting. DeFi exchanges are interesting. Crypto exchanges are interesting. NFTs are, and they're all interesting things, but they're all highly controversial. And there's a lot of uncertainty about the legal status. Like if they're securities, then they're going to be tagged with securities requirements. And right now, the securities regulators in the world have not offered any pathway for a digital security to trade 24/7, 365. So forget about whether or not they're registered or not, right? I can't trade Apple stock on Saturday afternoon on a crypto exchange, even though it's registered. Yeah. You see, so there's not a regulatory path for the other cryptos. Now, I'm empathetic. Like, it'd be nice if there was. I mean, if you want to grow that industry, you need a digital assets framework. But the sad fact of the matter is the only thing that we have clarity on is that Bitcoin is a commodity and you will be allowed to own it as digital property. The Chinese have deemed it property. You can own it in China. You can own it in Russia. You can own it in the United States. You can own it in Europe. You can own Bitcoin as property anywhere where property is not illegal. So like maybe in Cuba, North Korea, where it's illegal for any individual to own anything, right? Pure communist regimes, then it's going to be a difficult situation. But otherwise, this is a digital commodity, which is better than any physical commodity. And it's a digital property that's better than any physical property. And there really isn't any debate about that. You've got good clarity on that. And so my view on this is that Bitcoin is a solution that the universe, that the world has agreed on, that has consensus. It's a good thing and useful. Everything else is a murky, uncertain, risky proposition, and so you gotta take all of those with a grain of salt.
Great, thank you. I want to be respectful of your time. I appreciate you coming on today. If people want to stay in the loop and follow you, what's the best way to do that?
I post pretty frequently on Twitter/X. at Saylor, Saylor. So they can follow me at Saylor. A lot of stuff on Bitcoin is at hope.com. So think Bitcoin is hope and go to HOPE, hope.com. Okay. And you can follow information there as well. And, okay. I want to thank everybody for your time today.
Great. Thank you very much. Have a great rest of your day.
Yeah, you too.